This is TVM. TVM delivers breaking stories, global headlines, and the moments that matter. From exciting sports action to exclusive local events, we keep you connected. Celebrate our culture, people, and voices with powerful documentaries and inspiring stories. Experience premium entertainment, from trending music to urban lifestyle and beyond. Grow your spirit with life-changing messages and uplifting perspectives. Lead the way with bold conversations, fresh ideas, and thought-provoking shows. Wherever you are, whenever you want, watch TVM on all your devices. TVM, your world, your network.
Hello, welcome to another beautiful day as this, and of course, welcome to the program Money and Market. And yes, today we will be looking at two key words. In fact, let's make it three key words today. And two of them are going to be our basis for discussion. And then the third one is something we have been talking about right from the inception of this program. Let me start with the third one, the word inflation. Okay, so we all know that inflation means rising prices, right? That's just the only way we're going to define it. For the other two words that I've been talking about, they are savings and investment. Savings and investment. So today we'll be looking at savings versus investment, what works in high inflation. Like I said, three words there: inflation, investment, and of course savings. So let's critically look at something. Before coming to the studio this hour, we've been told, which is great news by the way, for the Nigeria economy, for the month of January 2026, we've been told that the inflation rate was pegged at 15.10%. And of course, some prices of foodstuffs have started dropping. But we'll not take that statistic, we'll not look at that data. We'll look at a particular data for inflation today. We pegged it at 30%. So something that costs, let's say 100, or let's say 100 naira today will cost 130 naira next year as a result of that inflation of 30%, like I mentioned earlier on. So what this means is that your money is losing value. Now, if you remember, we talked about the currency, how it gets, how it gets weakened. Okay, so you're following. So if we have 30% for as our inflation rate, 30%, and there's something that costs 100 naira today, you bought something today 100 naira, by next year, because of that rate of 30%, it goes to 130%, 130 naira, beg your pardon. And now that invariably means that your money is losing value. Now we're looking at Nigeria. Recently, experience has shown us that inflation has been on the highest level in decades in Nigeria. Food prices, rent, transportation, everything you can think of has been on the rising spike, as you want to say. So inflation is back again. When inflation is high, your salary buys less, your savings lose value, and then your financial plans are interrupted. Of course, we all know this. So let's take another example. If you kept let's say 1 million naira in a normal savings account, in the bank, and this bank is telling you that you're going to earn 5% interest for the 1,000 naira that you're keeping with them, then let's bring the 30% inflation into it, because you can't run away from inflation. That's how it is in economic terms. So with that, your 1 million naira that you've kept with the bank and the 5% interest that the bank is going to give you as you're earning, what that translates into is that you are not growing money. Your money you kept in the bank is not growing. I'll break it down. Don't worry. You are losing purchasing power. And then ultimately, you become poorer. Let's look at the graphics of inflation trend for a period of, say, 2024 to 2025, and by extension to 2026. Now, from the graph you are seeing, you could see that there is a steep drop from approximately 35% of the inflationary rate down to 15% or thereabouts. Um, and of course, that resulted in 2025 because of what we call rebasing. There was a rebasing event that took effect in 2025, and that's why you saw that at a point it got to approximately 15%. Now, this is according to the NBS inflation data. So, inflation in Nigeria hit near 35% in late 2024, but has fallen significantly through 2025, down to about 14.45% in November of that year, which is 2025. Now, that's progress when you look at it from a certain approximately 35% down to 14.45%. You say that, okay, that's progress. But then again, the other thing you were looking at is, what about the prices? Prices are still much higher than 2 years ago, if you do your math. Meanwhile, the Central Bank of Nigeria, which is the apex bank, has kept the NPR, what is known as the monetary policy rate, around, say, 27 to 27.5% through 2025. Now, high rates, are meant to slow inflation. We talked about this in one of our episodes. But even with that high rates trying to beat down inflation, they also make borrowing expensive, if you remember when we talked about budget. Now, let's look at another statistics before us, another graph before us. Now, this graphic is showing inflation versus savings interest rates. Okay, so while inflation is falling, look at it there, 14.45%, the cost of money remains high. Okay, and this is where we'll begin to answer a very critical question: what actually works during inflation? Because we'll be talking about this inflation. So, what actually works between these two things you're seeing on your screen? Savings, inflation versus savings, inflation versus investments. We'll look at those critically. But from what we are seeing, coming in from the NBS inflation data and, of course, from the Central Bank of Nigeria, you could see that the inflation rate keeps dropping, like we said, around 35% or thereabouts in late 2024. And then to 2025, we got to 14.45%. Okay? And like if you look at the savings interest rates, you could see that it held at between 27 to 27.5%. So structurally, what I want to make you to understand here is that inflation will never go away from savings, and of course, by extension, investment. We'll look deeply into all of that. But one thing is certain: in a time as this, where we have difficulties, in what's it called now, in the way inflation is in the economy, like we said, and I keep hammering this thing, inflation is like the thief that put hole in your pocket. Now, in a time as this, where there's inflationary trends everywhere affecting every strata of the economy, what will be best for you as an individual watching me? What would be the best for you? Is it for you to save? Is it for you to invest? Before coming on air, I asked some of my producers around, and some of them were giving me their opinion about, most of them were saying, I will go into savings. I will go into savings. And a deep thought, a deep thinking got them saying, okay, I think investment will be better. I don't know which of the divide you fall into, but this program today will be able to tell us where you should put your money. I keep asking this question. For instance, if you have 10 million naira today, 10 million naira today, that you want to do something with, what will be the best for you? Is it for you to save it in the bank, keep it in the bank? That will be giving you the instance we gave, I think about 5% earning to that amount of money at the end of the year. Or you want to go into an investment that over time, in a year probably as well, will earn you something better than what the banks are offering, 5%. Now, in a simple math or arithmetic that we'll go into later in the program, you'll get to understand that the 5% that these banks are giving you as your earning for that your 1 million naira or your 10 million naira in the bank, vis-a-vis, face-to-face, side by side, the percentage of inflation that is hitting the economy, you will understand that you are even running at a loss. Let me give you this insight before we'll dive deep into it. The 5% that the bank is giving you to your 1 million naira, and then the 30% of inflation that is affecting your money. When you remove 5%, when you remove 5 from 30, you'll be left with 25. But remember, this 5% is in the positive because it is the bank that is giving you. The 30% of inflation there is the minus because it is what is eating your money. So by the time you take 5 out of 30, you'll be left with 25. And so the 25% of that inflationary trend or inflationary rate will now affect your 10 million or your 1 million in the bank. The simple question will now be, are you now making profit? Are you really earning money on top of that your 10 million naira or 1 million naira in the bank? And that's why we say when inflation is high, your salary buys less. That money that you're thinking of that you're having, by the time you start withdrawing it to say, okay, let me use it, you begin to understand that it will even buy less of what the money can buy. Remember, money has been subtracted because of the inflation, and then the savings lose value because that's what it is now. You're trying to earn money, but at the end of the day, money is being withdrawn. Money is being taken from the money that you expect to yield some kind of earnings to you. And of course, whatever purpose or plan that you have put in place for that money that you want to use will now be affected. That's why we say your financial plans are disrupted. All right. So, like I said, we will go deep into the issue of savings and, of course, investment. All right. I just want us to break down things really, really nicely so that you understand where we are coming from. All right. We'll go into our next segment. But before that, let's take a breather. When we return, we'll be looking at vis-a-vis savings and inflation. Stay with us.
Welcome to Dursag Engineering and Services Limited. A trusted name in the oil and gas industry, proudly registered with the Corporate Affairs Commission since the year 2000. We hold several specialized permits with the Department of Petroleum Resources, are accredited with service and product codes by NIPEX, certified by Dun & Bradstreet, and proudly ISO 9001:2015 certified. Our head office is strategically located at 43 Airport Road, Warri, Delta State, Nigeria. At Dursag, our areas of expertise cut across critical sectors, including manpower sourcing and supply, both local and highly trained expatriate personnel. Engineering services across civil, electrical, instrumentation, and mechanical works. Construction and fabrication works. Specialized procurement and supply. Operations and maintenance services. And integrated marine services, delivering supply boats, crew boats, tugboats, barges, houseboats, and speed boats. We are proud partners to some of the industry's leading players, including NNPC and its subsidiaries, Seplat Petroleum, First Hydrocarbon Nigeria Limited, ND Western, Saipem Contracting Nigeria Limited, and Lee Engineering and Construction, among others. Over the years, we have successfully executed manpower, EPC, and marine support projects with a strong record of excellence. At DERSAG Engineering, we are committed to quality, safety, and timely delivery, ensuring that every project meets and exceeds expectations. DERSAG Engineering and Services Limited, your trusted partner in delivering world-class engineering and energy solutions.
Right, thanks for staying with us, and welcome back from that break. And before the break, we said we'll be looking at savings when we resume. So let's dive into savings. Let's look at some of this stuff we can see on the screen, some visuals if we can, where we actually can save money. Okay. Now, these are, when you look at the graphics on the screen, you could tell where we are going, where your savings are kept, and of course, we look at the advantages of savings in Nigeria. So you could see savings means keeping money in the bank, which is the bank savings account, and fixed deposits also in the banks, in cooperatives, like is also a financial institution, mobile wallets, most times also linked to the banks. Okay, so these are the medium in which you could save your money through bank savings accounts, fixed deposits, cooperative, and of course, mobile wallets. Now, the advantages of having your money kept in this form of banking or form of saving is: one, there's safety; two, there's liquidity; and three, emergency access. Let me break it down. Now, for the safety, you know that your money is not in the hands of any one man. Okay, it is in the hands of a body, a financial institution. Secondly, liquidity, it invariably means that at any point in time, you could convert your savings into cash at any point in time. And then for emergency access, I mean, when you have any emergency, you can always go there and get your money. So we all know that in Nigeria, savings, of course, anything that has to do with money and savings accounts in the bank and all of that in financial institutions are regulated by the Apex Bank, which is the central bank of Nigeria. But let's look at one major problem here. Most savings accounts pay between 2 to 8%. I said earlier on, we gave you an instance of 5%. Now, most savings accounts peg it between the range of 2% and 8%. If inflation, now we want to do some calculation, probably is where we're going to see some things now. Now, if inflation is 25% or 30%, you are earning far below inflation. I don't know if you get that. Like I said, most of the banks, according to Central Bank of Nigeria, because they regulate these banks, they ensure that most of these savings accounts, they pay between 2 to 8% for interest that you're going to earn. So if inflation is between 25 and 30%, it invariably means that you are earning far below the inflation. Inflation is, let's say, 30%, and your earning is between 2 to 8%. Which one is higher? The inflation's. So let's look at another graphics that will do a lot of explanation to what this invariably means. Okay, so what I just explained, let's look at it. Real return is equals to interest minus inflation. Just simple mathematics is what I just did earlier on. Real return equals interest minus inflation. I'll explain later. Now let's look at this savings real return. We look at inflation. We look at the typical savings account, and let's tell the real difference here. The inflation here, which is the red you're seeing there, is pegged at 30%, while the typical savings account here is at 6%. The real difference is minus 24%. Now, like I said, real return, I mean, what you are earning, what you earn at the end of the day, is as a result of interest minus inflation. So that's why we have the minus 24 there. The inflation there is 30, while your return there, your investment there, or your savings, let me not use the word investment, your savings is 6%. And that's why the real difference here is 24%. I hope you understand this drift. So that's why I'm saying if you earn like 6% and inflation is 30%, then the real return there is minus 24%. So what it means is that silently you are losing money. The return that you are expected to get, to earn in that your money, for instance, the instance we gave about 1 million naira, you begin to lose money silently. Now, this is what your savings can do for you. Let's break it down, because like I said before coming on air, some of my producers were saying they prefer the savings, but later they were like, okay, I think it's the investment. But let's look at what your savings can do for you, why your savings is good for you. I made mention of one of them. One, for emergency fund. Is good for emergency fund. Nobody is saying that savings is not good. Don't get us misunderstood. Savings is good, but it should be for emergency fund. And this emergency should be around 3 to 6 months time. That's when and how your savings should evolve or revolve around. It should be for emergency fund for 3 to 6 months expenses. For short-term goals, I mean, when you have short-term goals like maybe you want to pay for a certain thing, or you're looking for a certain thing to acquire or achieve in a short term, then savings is your sure plug. Then there is stability. The reason why you want to go for your savings is because the stability. But in all of these good things that we just enumerated for savings alone cannot beat inflation. Okay? Like I said, today we're looking at savings and investment. I'm trying to break down savings, and then I'll talk about investment. We'll differentiate them, and then we'll give an advice on which you should go for. But one takeaway from savings is that if you are looking for a kind of fund that should be used for emergency, then savings is your go-to. And in that particular space, and talking about emergency fund, it should be between 3 to 6 months. I mean, your emergency fund cannot be in 2 or 3 years. Like we used to say in our local parlance, we say save for the rainy days. So it is savings that can actually bring about save for the rainy days. Okay, another issue, another talking point, another takeaway from savings is that, if you are having goals for the short term, something that you want to achieve in a very short space of time, then it is savings that you should go for, because this will enable you to achieve what you want to achieve in that short term. So it's more or less like, it's likened to what's it called now? The emergency fund, all right? But in this particular instance, it is all about goals, not emergency, because emergency is just like anything can just happen and you want to run and collect money. Okay, so that's for emergency. But for short-term goals, it's something you planned already, that in so and so time, I want to achieve this thing. Okay, let's say in the next 3 months or 4 months, I want to buy a certain equipment. So you can save towards that. And when the time is right, you will draw this money and, of course, make the purchase. And, of course, there's stability. But remember, like we said, even as nice or interesting that savings could be, one thing you should all understand as well is that inflation bites really, really hard, on savings. Like the example we gave, if you earn 6% you earn 6% on the money you save, and of course inflation is 30%, then your real return is minus 24%. Let's put that slide back, that graphics back of savings and real return. Now you can see from the graph again, yes, inflation, typical savings account, and of course the real difference. So from the instance I was giving, as interesting as savings could be from what we've analyzed not long ago, like for emergency funds, for short-term goals, and for stability. But look at what will now be eating your savings, where your earning rate or your earnings is less than what inflation is bringing. Now, in these graphics, you could tell that your earning, which is 6%, is less than what inflation is bringing, which is 30%. And that's why we say the real difference there is minus 24%. I want us to take note of these very graphics and this very calculation, because by the time we start talking about investments, then you will understand where we are coming from, and of course the effect of inflation on both of them, talking about savings and investment. Okay, so this is all about savings we just talked about now. When we come back from this break, because we're going on a quick break now, when we come back, we'll be looking at investments. And then when we touch on investments, we'll be able to tell the difference between investment and savings. Stay with us.
Welcome to Dursag Engineering and Services Limited. A trusted name in the oil and gas industry, proudly registered with the Corporate Affairs Commission since the year 2000. We hold several specialized permits with the Department of Petroleum Resources, are accredited with service and product codes by NIPEX, certified by Dun & Bradstreet, and proudly ISO 9001:2015 certified. Our head office is strategically located at 43 Airport Road, Warri, Delta State, Nigeria. At Dursag, our areas of expertise cut across critical sectors, including manpower sourcing and supply, both local and highly trained expatriate personnel. Engineering services across civil, electrical, instrumentation, and mechanical works. Construction and fabrication works. Specialized procurement and supply. Operations and maintenance services. And integrated marine services, delivering supply boats, crew boats, tugboats, barges, houseboats, and speed boats. We are proud partners to some of the industry's leading players, including NNPC and its subsidiaries, Seplat Petroleum, First Hydrocarbon Nigeria Limited, ND Western, Saipem Contracting Nigeria Limited, and Lee Engineering and Construction, among others. Over the years, we have successfully executed manpower, EPC, and marine support projects with a strong record of excellence. At Dursag Engineering, we are committed to quality, safety, and timely delivery, ensuring that every project meets and exceeds expectations. Dursag Engineering and Services Limited, your trusted partner in delivering world-class engineering and energy solutions.
All right. Welcome back from that break. Before we went on the break, we said we've been talking about savings, and we said when we return, we'll talk about investments. Now, one of the takeaway from that savings is that inflation hits harder on savings. Well, let's see if that's exactly what inflation does to investment. But first of all, let's understand what savings is all about. Now, investment, I beg your pardon. Investment means you putting money into assets. All right. Now, these assets, when you put this money into these assets, they grow faster than inflation. That's a big takeaway on investments. Remember, savings, it was inflation that was eating more from the savings. But in this particular explanation or definition, investing means putting money into assets that grow faster than inflation. Let's give you examples. In stocks, in real estate, in agriculture, in commodities like gold. Recently, if you follow the story, the news, you'll see how the price of gold went skyrocketed, and a lot of people who were into the gold business made a huge sum of money and a lot. Then there's the treasury bills, and then there is bonds. We touched on bonds when we were talking about I think it was a budget or so. So the Nigerian stock market, for instance, which is the Nigerian Exchange Group, by the way, has had years where returns beat inflation. Now, real estate in cities like Lagos, especially, has also historically adjusted with inflation. But why is this so? Let's look at why. Real estate is one of the things that is really making a lot of wave when it comes to investing or investment. One of the reasons is because when prices rise, companies increase prices. One of the reasons, rents increase. Asset values, which is very key in this discussion, asset values increase as well. So investment, we can say, can inflate with the economy. Your investments can go up, can rise as inflation is going up, as the economy is going up. Let's look at investments that can outrun inflation. I made mention of some of them, but let's just highlight them. One of them, equities and stocks. One of my producers mentioned this one, and it's a very, very interesting investment, where you have shares in companies. They can rise faster than price levels. When you talk about shares, there's also the sectors tied to essentials, which are often very resilient. That's for equities and stocks. Another one, which I talked on earlier on, is real estate. Property values and rental income historically appreciate with inflation. Have you not noticed that as inflation goes up, you see property owners increasing their rents and, of course, the values for their property? Have you not noticed how some persons even sold buildings, houses around where you are for whooping sum of money? Okay. Now, we also talk about some commodities, which I mentioned one of them earlier on, gold, agricultural assets. These often hedge, inflation as well. So commodities like agricultural assets and, of course, gold are very, very interesting investments you want to go into. And then there is inflation-linked securities. Yes, we talked about this one when we were talking about wealth creation. Yes, when we talked about wealth creation, we talked about inflation-linked securities. Now, here you see some government bonds, adjust principal with CPI. So we have bonds here, issued by the government of the day, and of course, government securities. Examples like the treasury bills, the sukuk, and what have you. So these are investments that can beat inflation. That is when I say beat inflation, it beats inflation hands down. All right, equities and stocks. So you could be looking at these investments like you want to really, look at them and say, okay, let me go do investment there. Real estate. A lot of people are into real estate as we speak. For equities and stocks, well, it's not really news now. At least I've seen while I was in school, in my school days, some of us, bought some shares or some stocks from companies, you know, and we made some monies back then anyway. And then we looked at commodities. Well, this is for the really, really uh, rich minds, let me put it that way, when you want to go to trade in gold. And of course, agricultural assets, another way to go. And I don't know why most people are not going into agriculture in Nigeria, but at least some persons are going into it right now. Then inflation-linked securities, and then government securities. So higher yield fixed income when rates are high. That's just the basic truth. Higher yield fixed income when rates are high. But like I said, for everything in life, there is a positive and a negative. Remember when we talked about savings, we talked about the good parts or the good side of saving, for the short term, for emergency, stability, And now we've talked about investment now, and we've seen that if you really want to make some cool cash where inflation cannot eat it, instead it's beating inflation, then investment is your go-to. And we'll make mention of some of the investments that can really, really yield good earning for you. But then here's the truth: investments, as we've been talking about, carry risk. Like I said, for everything that has advantage, disadvantages will always be there. Markets can crash. I mean, for those of you who go into investments, we've seen companies that sold shares or stocks and stuff like that. At the end of the financial year, they say they run at a loss, So markets can crash, definitely so. There is bad decisions that can cause losses as well. So when some decisions do not go the right way, definitely you see losses happening here and there. So during inflation, some assets perform better than others during inflation. Okay, let's look at the better performers in high inflation. One of them is real estate, real assets. Like one of my producers said, land, and it's great. If you have the capacity, because it's capital intensive, it's really capital intensive. It's a lot of money when you want to go into real assets like land and property. Like I said, if you've been around, if you've looked around yourselves, you could see that some persons are buying some properties. Okay, so those are real assets. Those are people who are going into real assets investment. So there's also the commodities, like we talked about, gold, and then stocks in essential sectors, inflation-linked bonds, like we talked about. What about the poor performers when it comes to investment? One of them is cash. All right. And then there is low interest savings in these particular spheres. There's fixed income locked at low rates. So one thing is, when I said earlier on that one of the volatile issues about investment, we said investments carry risk, markets crash, bad decisions can cause losses. Now, most people will now be saying, that means investment is gambling now. I mean, if the market will crash and it will affect me, if bad decisions are made, it will make me to run at a loss, and so it's a Ponzi scheme. And so is this. No, it's not Ponzi scheme. Investments as these that I've, highlighted earlier on, they are not Ponzi scheme. Ponzi schemes are different from this particular one. So investing is not gambling. It requires knowledge. It requires diversification, and it also requires patience. The Ponzi scheme do not require any of these. Okay, let's look at graphics here, investment performance against inflation. Yes, so here you can see asset returns against inflation trend. Look at real estate. Look at real estate. Inflation. Look at where inflation is, and of course, look at where the stocks and the real estate are. You get the point now. Look at stocks. Look at stocks. Now, for stocks, look at the rate of inflation. Let's say, give or take, below 3%. And then look at where the stocks are, above 6%, getting to maybe 7, 8% right there for you to earn. And then look at government bonds. Government bonds, look at the inflationary rate and look at where the bonds are. So you could see that the asset returns against inflation is how will I put it now? Satisfactory, is successful, is encouraging. That's the word. It's encouraging to go into investment than savings. Because when you look at the investment performance against inflation, then you say that investment is doing well against inflation. Inflation cannot overshadow, investment. But the downside of it is that there is investment risk. There is crash in the markets. It happens, and of course, bad decisions can make you to lose some good cash. All right. So this is all about investment. This is all about investment. We've talked about savings, and now we just finished investment. So, to you, what do you think will be the best option for you to go into, savings or investment? We'll talk about this when we come back from this break. Stay with us.
Welcome to DERSAG Engineering and Services Limited. A trusted name in the oil and gas industry, proudly registered with the Corporate Affairs Commission since the year 2000. We hold several specialized permits with the Department of Petroleum Resources, are accredited with service and product codes by NIPEX, certified by Dun & Bradstreet, and proudly ISO 9001:2015 certified. Our head office is strategically located at 43 Airport Road, Warri, Delta State, Nigeria. At DERSAG, our areas of expertise cut across critical sectors, including manpower sourcing and supply, both local and highly trained expatriate personnel. Engineering services across civil, electrical, instrumentation, and mechanical works. Construction and fabrication works. Specialized procurement and supply. Operations and maintenance services. And integrated marine services, delivering supply boats, crew boats, tugboats, barges, houseboats, and speed boats. We are proud partners to some of the industry's leading players, including NNPC and its subsidiaries, Seplat Petroleum, First Hydrocarbon Nigeria Limited, ND Western, Saipem Contracting Nigeria Limited, and Lee Engineering and Construction, among others. Over the years, we have successfully executed manpower, EPC, and marine support projects with a strong record of excellence. At DERSAG Engineering, we are committed to quality, safety, and timely delivery, ensuring that every project meets and exceeds expectations. DERSAG Engineering and Services Limited, your trusted partner in delivering world-class engineering and energy solutions.
Okay, thank you once again. I keep doing this because it's not easy to sit and watch in issues as this. But, this is very enlightening. This is very educating. And this is what Money and Market does to you, the viewers. And I hope you are learning since we started this program weeks ago. So today we've been talking about savings versus investments. What works in high inflation? Is it savings? Is it investment? Okay, so this last segment, because this is the last segment, and of course we'll do justice to it and try to see how we can balance things up and round up for today. So, what is the way forward? I mean, what really is the best option for you to go to when it comes to savings and investments in high inflation? The answer is the word balance. You have to balance things up. In life, you've got to, go through your scale and then balance things up. And that's exactly what we mean here. Now, the first step is to keep emergency savings. Now, listen very carefully. What I'm about to discuss with you is you are not throwing away one and holding on to one. All right, there's a way you can balance things up. You can have savings running, you can have your investment going. So the step one is to keep emergency savings. And earlier on, we talked about your emergency savings to be in the bracket of 3 to 6 months of expenses. Okay. So the step two, invest the rest strategically. We'll break it down, don't worry. Invest the rest strategically. So if you have a certain amount of money that you have in your possession, do emergency saving that will take care of whatever that will come up between 3 to 6 months. And the rest of that money, put it into investment. Let's take the example we gave earlier on, the 1 million naira. Though it's little, let's say 10 million naira. You have about 10 million naira in your possession. Keep a certain amount of money in a bank, could be in fixed deposit or whatever, but at least it's acting up like your savings. Now, the remaining of them, strategically, don't just rush, but, put them into investments. This is the simple structure of what I'm trying to say. 20% of that money, let's say 10 million naira now, 20% of that money, put it into emergency savings. All right? My math will fail me. If not, I would have been bringing out the figures from the 10 million naira for this 20%. But 30% of that 10 million naira, put it in fixed income or treasury bills. Now, remember, treasury bills are coming from under investment. Take another 30%, invest it in stocks or equity funds. Now, this is for most companies who are selling shares and what have you. Put 30% of that money into it. Now, the remaining 20%, because we've done 20, 30, 30. So the remaining 20%, we've done 80% now. The remaining 20%, put it in real assets or business. Now, let's see if we can really break this down. 10 million naira. 20% of 10 million naira will give you, what again? 200,000 naira or thereabout. Then 30%, because when you take, what's it called now? 200,000 naira from 10 million naira. Is it 2 million naira? 2 million naira. Yeah. When you take 2 million naira out of your 10 million naira, you'll be left with 8 million. You take another 2 million. Now, that first 2 million, you put it as into fixed deposits to act as your emergency savings. And then I take another 2 million naira and pump it into real assets or business. That's 4 million out of 10 million. You'll now be left with 6 million. This 6 million naira, break it into two halves, 3 million, 3 million. One of the 3 million naira, push it into fixed income or treasury bills. Okay? And then the other 3 million naira, push it into stocks or equity funds. Now, this is just the simple structure of strategically investing and at the same time keeping emergency funds. Okay, so let's look at the graphics before us. Let's just try to show you what I have been trying to say. Now, from the graphics, if you are young and earning, you can take more investment risk. Okay, now before I go into that explanation, all the things I've been talking about, like when I broke down the 10 million naira, you could also see from this pipeline allocation chart, emergency cash, fixed income, equities, and real assets. We could just break them down real nicely. From the emergency cash, like 2 million naira, your real assets, 2 million naira, then the fixed income and your equities, 3 million naira each. That makes up 10 million naira, about what we just analyzed. All right, so let's look critically at this chart. If you are young and earning, you can take more investment risk. This is where the advice is coming now. Like I told you, we'll look at the savings and investment and then give you advice on where you can put your fund strategically. So, like we said, if you are young and you are earning money, then you can take more investment risk. If you are close to retirement, as in you are aged and you're getting close to retirement, you have to focus more on income stability, how you can get income steadily. Okay? Because high inflation is dangerous and it can affect your health. But it also forces smart money decisions. So those who leave all their money in savings accounts lose quietly, like we said earlier on, and of course, those who invest wisely preserve and grow wealth. Now, that's why we said if you are young and earning, you can take more investment risk because high inflation is dangerous and all of that. So it will give you opportunity to face the risk as it comes. And of course, when you are aged or close to retirement, I mean, you make a lot of money wisely. You grow your wealth, quietly, because you focus more on income stability. All right. So those, like we said, Nigeria's inflation, after peaking 35%, has eased to around 50%, yet remains well above typical savings yields. When inflation outpaces your savings interest, real purchasing power erodes. That's why many savers, many people who save today are turning to diversified investments such as equities that you're seeing on the screen, real estate, and of course, inflation-linked securities, which, by the way, historically have a chance to keep pace with rising prices. But balance is key, like I just said earlier on. Keep enough liquid cash, no doubt about that. Why? For emergencies. Like I said, liquidity, the liquid nature of money is cash. So ensure that you have cash in your hand, and of course, and then strategically deploy the rest into assets like I broke them down that have historically shown real growth above inflation. So this is where, according to the way we speak here, the cocoa is. The question now to you, the viewers, if you really want to go all out, which do you think is better if you want to earn money? I mean, earn money. Which one? Is it savings? Is it investment? Especially in the Nigerian economy where inflation is always high. Which would you go? Like I advised earlier on, go to both, but with wisdom. Keep money aside for emergency purpose, which is savings, and then invest the rest, like we broke them down with the example we gave with 10 million naira. All right, so this is it on the topic for today, savings versus investments in a critical situation as it is in Nigeria where inflation is always high. I hope you have learned one or two important things today. Just to let you know, that Money and Market is a program of TVM, and yes, it is a program that tells you where the money goes and how things operate in the markets. All right, that's a wrap on today's episode. For more updates, you can watch us via TVM's app, accessible on Play Store and, of course, Apple Store. You can then follow, share, comment, and like via digital platforms that are displayed on your screen. Please do well to also reach us via the numbers on your screen. There's a WhatsApp number there, and of course a telephone number there. You can send messages, or you can even call to tell us where you're watching us from, and of course tell us one or two things about the program. And if you want to contribute as well, you can drop any of the comments on our social handles. All right, until I come your way again, always remember that in money matters, impatience leads to regret. Wait until the numbers make a lot of sense to you. Wait until the timing is right. Bye for now.
Welcome to TerraMedia Engineering and Services Limited. A trusted name in the oil and gas industry, proudly registered with the Corporate Affairs Commission since the year 2000. We hold several specialized permits with the Department of Petroleum Resources, are accredited with service and product codes by NIPEX, certified by Dun & Bradstreet, and proudly ISO 9001:2015 certified. Our head office is strategically located at 43 Airport Road, Warri, Delta State, Nigeria. At TerraMedia, our areas of expertise cut across critical sectors, including manpower sourcing and supply, both local and highly trained expatriate personnel; engineering services across civil, electrical, instrumentation, and mechanical works; construction and fabrication works; specialized procurement and supply,